All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Thursday the 19th. So through almost the whole week, we got one more day ahead of us. We got this crucial options expiration. Sorry, it's not crucial, but you know that every month now, this options expiration date has been a particularly difficult time of the month, and so far it's kind of living up to what we've seen the last 3 or 4 months. It's been very rocky around this particular week. I know I sound like a broken record with this, talking about this in just about every member video, but it is what it is. I repeat myself so that traders can kind of be can plan ahead and try not to kind of make the same mistakes month after month. But First disclaimer in front of you, first might as well mention that everything that we're going through here in this video is for information purposes only, not giving out any advice or recommendations. Everything that we're talking about is for education purposes only. If the video is a little bit blurry, it's because YouTube takes a while to render the high definition version of the video, so just be patient with that. But yeah, kind of the same story, and when we look at these numbers every day in terms of breadth, and what we're just seeing now over the last month or so is this, the word that I keep mentioning too is deterioration. We had 17 decliners today in the Dow versus 13 advancers, 272 decliners in the S&P versus 232, and then a bigger number there in the Nasdaq, 2,052 declining names versus 844 advancing. So, it is kind of crazy how long this nasty looking breath has been. Again, the translation here, which nothing new, continue to talk about this, is that it's just a harder market if you're more of a long only type investor, and when you've got more names that are declining on every day, it just makes it a much more difficult area to kind of be in every day in terms of the environment to trade in. And the analogy, of course, that we use is the wind is at your face rather than you've got a tailwind when you're trading. The other analogy that I always use is if you have no edge in trading and you're just randomly picking stocks, and if you pick 10 stocks that you're holding randomly, you'll probably have about 6 or 7 that go down and 3 or 4 that go up. Right, that's what declining breath means, and that's what we've had now. And it's getting so. There's two things majorly that I'll kind of talk about in this video before we get into the individual movers. Is that we've been seeing, of course, every month now, almost for not every month, but the majority of months in 2021, where the back end of the month is very difficult, right? And we are in that period that starts with options expiration week, which has also been, I think, the last 3 or 4 months, has been a kind of a dip mode. Not exactly correction, but dip. So that is continuing to go on. The advanced decline line for NASDAQ is now below the 50-day moving average and below the 100-day moving average, so that is breaking down. That should break down a little bit further because this is yesterday's data. The Bloomberg does not update this till about 8 o'clock or so at night. This is the advanced decline line for NASDAQ, which again, these are things that I tweeted out like at 7 o'clock this morning, but it's deterioration, right? That's the best word I can use to describe it. We are just seeing more areas of the market continually go down. So what I would say is, trying to basically get through the end of the month and scalp and try to make a little bit of money here and there, but it is a very difficult environment to swing trade. There are some standouts, which I will talk about. How does the S&P technicals line up here? Well, we did bounce off the 50-day moving average, so that's a positive. That's a positive thing that happened today. Also, if you want to look from our technicals, we did bounce off this version point of control. Again, that's why we use the MarketWebs. That was a perfect bounce off of again, virgin point of control. It's arising from this value area back a few weeks ago, where there was a lot of volume, right? Which is always this point of control. We're looking at this volume profile. So the majority of the volume happened in this volume profile right here. And we draw this forward when price does not touch this. Why? Because it will often act as a magnet where these buyers, a lot of buyers and sellers previously met up, but we haven't revisited, right? And that's a perfect case in point. You could see this happen back here too a month ago, right, where we spilled down, and almost the same thing. Where was the first VPOC that was taken out earlier in the week, and then the second. So notice that we really went. This was a larger move down back. So and again, I'm not saying that the week is not over yet, but we kind of had this nice V recovery, and notice like how far we were underneath this value area, right, which is in here. This case where we kind of rebounded to was basically, we hit resistance, right? So again, we just don't have the strength to kind of overcome that right now. So, the word that comes to mind, the next word, we talked about deterioration, and that's been a word that I've been using for a while, but the other word is patience, right? So I'm hoping, because I'm a little bit optimistic, that once we get through this seasonally weak month, which it is. August is always a tough month, or I shouldn't say always, because there's nothing always, but is generally a tougher month than normal. So you just kind of have to realize that we're in a tough month, and to really try to keep your confidence intact during these periods, right, and not get too frazzled, because sometimes what happens as traders when we get frazzled and when we get disappointed, what happens is we tend to make mistakes. Sometimes we tend to push during the wrong times, right? The other thing about, obviously the technicals is what I analyze a lot and so forth, but I don't talk too much about, the behavior that happens in trading, right? If you start to kind of get into a little bit of a rut, we as traders tend to kind of push at the wrong when we're frustrated. We tend to look at our P&L and make some bad decisions, sometimes reacting to our P&L. But anyway, so I talk about the negative first. But that's the case. So I would say, I continue to kind of, I do these videos every day and so forth. But I'm telling you, if you could take some time off, right? And I've said this now in several videos this month. This is why a lot of traders take off too in August. Not just obviously because it's a difficult environment, but that's what people do in August, right? And that's also, partially what's going on here too. We also have this thing next week, Jackson Hole, which is the next. We had the Fed minutes yesterday, which I thought were a complete waste of time and an overreaction. We want to hear about things as they evolve, not stuff from 3 weeks ago. So next week we do get Jackson Hole. Some people are expecting like that we're going to get some type of guidance. Maybe some type of schedule about tapering. I don't think they're going to do that quite yet, other than maybe set the stage for getting closer to that. But it'll be one of those things to kind of another event to watch out for. And then maybe we can get through this month. And I was on Bloomberg TV 2 days ago, and what I said on Bloomberg was we just have to kind of get through this month. So that's that. Let's look at NASDAQ too. So those are my main, overall macro thoughts. Is that just kind of getting through this? Where it's troubling is that is that continuous move down in breadth. Hopefully, that will improve once we get through August too. That's kind of what I'm thinking. NASDAQ, we are still inside value. You got the bounce off the 50-day moving average there. Again, the 1 hour charts give us such good such good information. There was also a VPOC taken out here, I believe. Maybe it was earlier in the week, but same thing. We're coming up to the bottom of value, and we just don't have enough. We don't have enough momentum. We don't have enough oomph to kind of reclaim, a level where we saw where it was support earlier in the week. Now it's resistance. We did not take this out. So I don't know if we're going to leave that for another time to take out, but you really have to worry about these red lines the closer that you are to them, right? Or the more selling pressure. If we happen to get selling pressure, that could come into play tomorrow, or if not next week. But I don't know that. And then of course, the one that's really bad is the one that just cannot rally. We got a little bit of a bounce yesterday off of this Virgin point of control. In the small caps, this is Russell Futures or IWM. This is Russell Futures, but it's a very similar pattern because of the same things for IWM. But yeah, we continue to trend lower here. So there is a new development here. This is the first break of the 200-day moving average. You're going to see this chart all over the place because it's the first break of the 200-day moving average since all the way back in September. And I don't even know. I guess that was a close below the 200-day moving average, but yeah, basically a year ago. Note that price action too, right? August, a bit weak, right? This is a bit different. It's a bit weaker, but sideways, sideways, sideways. Let's look at the weekly chart too. I've talked about this for a couple weeks now. As we get closer to the end of the week. And I've said before, like this little move back, where we actually increased, only basically got us to this midpoint. So I thought that this was going to be an issue that could be coming if we didn't get back above here. So some negative things going on. All right. So let's talk about some of the positives for the day. All right. So if we look at this. Semis were nice today. Nvidia made a nice move today. So let's go back to this daily chart. We're in value. We're above the 50-day moving average. So there's not a ton of conclusions. At some point, and I said this in the trading room today. I'm like, hey, if we could stay above 201, this would be really nice for Nvidia. But we didn't. Not much to really kind of conclude other than, it is what it is. This is a nice day for Nvidia, up 4%. They were very unlucky having to report earnings yesterday, I thought, but a nice move and some nice, a nice move by a few other areas. I like this ASML. This had a nice move today, up 1%, went lower. So, a logical place for this to kind of turn a little bit. Let's see what that does tomorrow. The software space, some nice performance there as well, right? So one of the things that I said right around the open, when we started the day, things like utilities, consumer staples, they were leading. They were the only thing in green, and we started to see that kind of flip, and you could see the best performers were that increased over the session were the semis, the software, the medical devices, and tech. Right, so Microsoft, for example, stood out to me. You look at this Microsoft chart and you would be like, "Hey, really? This market's weak?" But that's where the strength has been in some of these bigger names. Also, I mentioned the medical devices. Look at ISRG out to new highs. Right, where's the weakness here? Right, so INMD, which has been one of my favorite names. As well in the medical device space. Very, very strong, right? And then if you look at names like, a name that people never talk about is this Agilent Technologies. Look at this thing after earnings. Huge strength. So for now, and you just kind of have to be on the look for rotations, but this medical device group has been absolutely amazing. Abbott and TMO were strong earlier in the week. They're hanging in there too. CRL has been another name. Medtronic hasn't been one of the leaders, but is looking a bit better. Of course, DHR has been another very strong name. Look at the trend in this thing once Thinkorswim adjusts. So, continues to be quite strong. Just a few other charts to mention. Net was another one that caught my eye today. Trying to turn. We'll keep an eye on that one. We'll go over my trades as I always do. I tried some Jeffries upgraded 2 software names. I think it was just 2. Maybe it was more, but I know that there was a note out for 2 names. I picked BILL. It just didn't go anywhere for the day. The other one that they upgraded, so I guess I got a little bit unlucky, was Smartsheet. This had a really nice day, up 5.5%. And keep in mind this bill reports next week. All right, so those were a couple names that stood out to me. A couple other things. We check out our website. We've recently redone this. You can go to our services and products. Again, my goal for traders is to to get them to improve a little bit and come up with a process. Just like we had talked about all last week, that this week was going to be a difficult week. So these are things that I try to help traders with, just to get them a little bit more on a process and on a plan, and kind of know what's in front of them in terms of events. The other thing too, which I would encourage anybody, if anybody is interested, there's this contest that I entered for the first time this year. This is a financial competition trading contest. Really cool. There's 336 entrants to this contest, and what you'll find is there's less than 40 people who have put the results out. So I'm on here. I'm not leading, of course, but here's my name. You could get involved in this contest. It doesn't. You have to pay a small fee to get involved, but it's really interesting, to be a part of this. And I will do this contest again next year. I think it's fun. It's challenging. So again, I will do it next year. Mark Minervini, congratulations for his years that he's having so far. But first year I've ever done one of these contests, so I hope to look to improve upon it a little bit next year. But yeah, check out that contest, and it is August. We can already kind of start to think about next year already. But yeah, that's it for today's video. I would say. Just continue for me to be cautious. Oh, I didn't show. I know I forgot something. I didn't show my my trades. Yeah, so you could see, what I'm kind of doing is, trading a little bit. But I bought the dip. I thought that there was some buy the dip opportunities, and I did this with SE. Again, just not trading very large here. But here, notice that I really stopped trading around like 10:30 today. I added. I like this U pullback, even though this hasn't started to work yet. But here was the VPOC takeout for U, and this would be a logical place for this thing to bounce a little bit, after good earnings. So we'll keep an eye on this name. Starter position there. But yeah, you could see what I'm doing here. Once I think, the momentum kind of just wanes, once we get past like the first hour and a half of the day. So you could see I'm not really doing much, just, scalping a little bit here and there. But usually for me, I'm a bit more active, but I'm just recognizing how difficult this environment is. Oh, the last thing I will say is I knew there was a point that I wanted to make. I thought the Cathie Wood interview on CNBC was pretty interesting. Right? I know she's a fund manager who gets critiqued a lot. There's a lot of fans of Cathie Wood. There's a lot of people who don't like Cathie Wood. Right? You could just open up Twitter and you can kind of see how that is. Here's the takeaways, right? So I try to provide a little bit of a different perspective, and I thought, any fund manager, right? They're doing the research. She mentioned that she has what she thinks is a unique model, right? Where she's basically has quants, and she has subject people who cover various different groups or sectors, And so she thinks she has a pretty good model. Now, she's not the only one to have this model, right? There's a lot of hedge funds who have done similar things, right? They hire doctors, for example, for the medical field, right? Because they have a really good knowledge already of that. And so what the takeaway, if you're a trader, right, if you're a retail trader or even an institutional trader, is to understand that they're putting in a lot of research, right, for their security selection. The advantage that we have, and where I get my edge, is to comb through their holdings, right? What's nice is they're completely transparent when they take a position, right? So, for example, they went long some they added, I believe, to their NVTA position, which was down 3.9%, right? Do I want to own this thing here from a technical basis? No, but I want to understand they like it and they like it for the long term. So I could put it into my system, and I have the ability to say, hey, I'll wait for this triggers for me, right? Because I am also a trend trader. I use the MarketWebs indicator quite a bit, but I'm also a trend trader, and I know when things are in downtrends. I don't want to own things that are in downtrends. So I will wait, right? And just like it's the same thing with you, which I dogged for a long time. I said, hey, I don't want to own this thing while it's going down. I want to wait for this thing to stop going down, right? They were doing all this buying in here, right? And so on and so forth. I wait until the price action looks better, right? And what we're doing on a daily basis is it's a process of elimination. We look at so many stocks. I, for one, don't want to own stocks in downtrends. There's nothing that really comes about that's a good thing for a stock in a downtrend. When stocks are in uptrends, right, you're putting the risk to reward just in a better place, right? When you're in an uptrend, you know how to define your trend, your trade a lot better. When things are sliding, and they haven't finished going down, right? You could draw the line in the line in the sand someplace, but you don't have any confirmation that the selling is done, right? And that's what you have going on in this particular name, right? So I think this is a very interesting group, but we don't know when this is going to stop going down. It's a guessing game, right? And that's not a game that I want to play with my money, right? On the weekly chart, right, we're traveling through the value area. So where is this thing going to come down to? We don't have that information yet. Is it $17? Is it 20? So again, I see a lot of people post stocks that are in downtrends. I get, maybe they're just looking for a quick turn, but it is such a harder game. And if anybody's not familiar with this concept of trend trading, read a couple books about it, right? Trend trading is you could just Google trend trading. There's a bunch of really good books. Turtle Traders is a great book to read on it. But so anyway, I'll leave it there. The video is now over 20 minutes, and I think that's good enough for today. Have a great night, everybody, and I'll see you tomorrow.